Today we are looking at the balance sheet. We're looking at the balance sheet. So I've started the stream. Join from YouTube. Join from YouTube. Use the link on my bio. Use the link on my bio. Use the link on my bio to get to YouTube. Okay, nice. So Gabriel, the people who want to join the class, now is the time. So I'm streaming from YouTube. There's a link on YouTube. There's a link on TikTok stories. There's a link on TikTok stories. And today we are looking at the balance sheet. Today we are looking at the balance sheet. We will start at 7:05 East African time. So Gabriel, that is 6:05 for others. I think also for South Africa, that is like 6:05 p.m. Join so that we start. Join so that we start. That is from the YouTube account. For the ones who already subscribed, it is easy. It's easy to join. I think I've shared a link of the live. Confirm once you join, confirm once you join. Hello. Oh my God. What did I just do? So we are starting at exactly 7:05. 7:05. We're starting exactly at 7:05. On the YouTube, go to your YouTube and join the stream from YouTube for the people who are here. We are live on YouTube. We are live on YouTube. We are starting at 7:05 East African time. How is from YouTube for the ones who have joined? Hello. So we are streaming from YouTube. Join from YouTube. I'm sharing my screen on YouTube stream. I'm sharing my screen from YouTube stream. There's a link on my TikTok stories. There's a link on my TikTok stories for the ones who are on TikTok, the ones that are live on TikTok. You're going to find me on YouTube. You're going to find me on YouTube. Hi, Mohammed. Hello. We're about to start. We start at 7:10. I'm waiting for the others to join. Remember, today we are looking at the statement of financial position. That is what is commonly known as the balance sheet. I Baraka. So confirm the countries you're joining from. For the people still on TikTok, we are streaming. I am streaming on YouTube. There's a link on my TikTok stories. Kindly go join from there. There's a link on my TikTok stories. There's a link on my TikTok stories. There is a link on my TikTok stories. Hi, Mohammed. Hi, Baraka. Which countries are you joining from? What's the time? What is the time? For the people on YouTube, we're about to start exactly at 7:10. And today we are looking at the balance sheet. And by the end of this section, you should be able to understand what the statement of financial position presents, and we should be able to know what are these we call assets, what do we call the liabilities, what we call the liabilities, and what we call equity. Okay, and why the statement of the balance sheet always has to balance, and where this is coming from. Why, how does it balance? Okay. Again, for the people on TikTok, we are live on YouTube stream. Kindly join the stream from YouTube. We are looking at the balance sheet today. That is the statement of financial position. You're looking at the statement of financial position. For the ones who have joined from YouTube, hello, hello, hello. Hello, hello. Say hi, hi, how are you? Before we start, in case you have any questions, feel free to drop it on the chat. Drop it on the chat. For the people joining from TikTok, I'm live on my YouTube. There's a link on my TikTok stories. There is a link on my TikTok stories. There is a link on my TikTok stories. There is a link on my TikTok stories. Hello, Ruman, Teha. Which countries are you joining? I'm about to start the class exactly at 7:10 East African time. If you're joining from, if you're on TikTok, just go join from YouTube. Thank you so much, Alpha. Thank you so much. For the people who are here, we are looking today at the balance sheet. We are looking at the balance sheet. That is a statement of financial position. The statement of financial position. And we are starting exactly at 7:10. 7:10 East African time. That is in the next 4 minutes. So if you are here, kindly join, use the link on the TikTok stories. Use the link on my TikTok stories. Use the link on my TikTok stories. Statement of sole trader partnership. I will schedule that, Mohammed. That is well noted. I will schedule that next week. Okay, we are going to look at partners. Okay, we're going to look at statements for partners. That is well noted. That is well noted. For the people who are on TikTok, I am about to start the stream on YouTube. The class starts in the next 2 minutes. 2 minutes later, we're going to start in the next 2 minutes. So kindly join from the YouTube TikTok stories. There is a link there. There's a link there. Go subscribe and join the live. Okay. Hi, hi. Yes, Alpha, I'm usually here almost every day, but I stream from YouTube. I stream from YouTube. Stream on YouTube. I stream on YouTube. For the ones who are here, check the YouTube. Check YouTube. We are about to start in the next 2 minutes. 2 minutes, 2 minutes. We are about to start in the next 2 minutes. Hi, hi, sweet, hi. For the people who are joining on TikTok, we are streaming from YouTube. We are streaming from YouTube. We are streaming from YouTube. I'm sharing my screen on YouTube. I am sharing my screen on YouTube. And today we are looking at the balance sheet. Okay, we are looking at the balance sheet. That is a statement of financial position. And the statement of financial position. And we are about to start in the next 1 minute. We are about to start in the next 1 minute. We are about to start in the next 1 minute. So use the link on my TikTok stories. Use the link on my TikTok stories. You're going to get to this YouTube stream. You're going to get the YouTube stream. You're going to get the YouTube stream. For the people who are here, we are about on TikTok. We're about to start now. Okay, we're about to start. There's a link on my TikTok stories. Okay, we will start. For the people on YouTube, ready? Welcome to this session. As I mentioned, we're going to be looking at the statement of the financial position, that is the balance sheet. The balance sheet, okay? It was traditionally, before, it used to be commonly known as the balance sheet. And basically, this statement, it represents three items. That is the assets, okay? The assets, liabilities, and equity. Liabilities and equity, okay? So remember, before we even proceed, I want us to recall what we used to, the accounting equation. Basically, the accounting equation is a fundamental, is very fundamental to accounting, and also basically the double entry. accounting system, okay? So when we look at the accounting equation, what does it state? That the assets of a business at every particular point in time, the assets in that business are equal to the liabilities plus equity, are equal to the liabilities plus equity. Hi, Yonda from South Africa. So the assets is at every particular point, the assets in that business will be equal to the liabilities plus equity, okay? Remember, what we refer to assets are what basically the business owns, okay? What the business owns or what the business controls, okay? And this thing has to have an economic, it's something that has an economic value. If you take it to the market, you'll be able to get, you can sell it at some amount, okay? Then we have the liabilities. The liability is what the business owes a third party, okay? By a third party here, I mean it could be your supplier that you've not paid. It could be the landlord who you've not paid, okay? That is what you're calling here the third party. Then when it comes to equity, this is what belongs to the owner. So this is the owner's share. Definitely when you want to invest in a business, you want to get some return, right? And you also, even if it is a publicly listed company, you buy shares so that you can be able to get those dividends. So this is the owner's share. And at every particular point in time, the assets in that business will be equal to the liabilities and equity, okay? And even if you look, every time a financial transaction happens, because of the double entry system, that is how we record, because recall, when we do a transaction, for example, when we go to buy inventory to sell, let's say we are dealing with a company that is buying cups and selling cups, okay? So when they go to buy, let's say, for example, the transaction of buying, they go to buy from the supplier. So here we have the supplier, okay? So here we have the supplier, and here is the business, okay? So what happens is in the business, the business is going to receive the caps, okay? The business is going to receive the caps, and the business is going to give out cash. Let's say, for example, they pay in cash, okay? They pay in cash, so they're going to give out cash. So every time a transaction happens, at least two accounts are being affected. And that is why there's all the debits. When we are recording a journal entry, the debits and the credits will always be equal. The debits and the credits will always be equal, okay? So this is just to show you, like, when every time a transaction happens, the accounting equation will remain balanced, okay? For the people on TikTok, remember we are streaming from YouTube. We are streaming from YouTube. Just use the link, the link on TikTok. The link on TikTok stories. The link on TikTok stories. Okay. Join from there. Check the link on TikTok stories. You're going to find me there on YouTube. Okay. So we'll continue. So from this, today now, for the statement of financial position, we'll basically have listed the assets as at that particular point, the liabilities and equity as at that particular point in time. And because of the accounting equation, the asset as at that particular point will be equal to the liabilities and equity, okay? So how do we know something is an asset? An asset is basically something that has an economic value. So it is an economic resource, okay, that the business is controlling. And then I said for the liability is what you owe your third party, and then we have equity, okay? So I want us to use an example. To know how we go about creating the statement of financial position. Remember, this statement basically now lists the assets in the business, the liabilities and equity in that business, okay? For the people joining on TikTok, I am streaming on YouTube. I'm streaming on YouTube. I am streaming on YouTube. I am streaming on YouTube. The people joining on TikTok, I'm streaming on YouTube. Just use the TikTok. From the stories, there's a link to join. There's a link to join. Let me know once you're able. Okay. So for the now let us use this example to get to understand how we come up with the statement of financial position. And basically we have to classify them into, for example, the first item we need to list is the assets. Okay. And remember, the statement of financial position, it is usually us at the particular point in time. Okay. So we are saying, as at, let's say today, which assets do we have, which liabilities do we have, what amount of equity do we have. Okay. So usually this statement is showing the balance as at a particular point or given point in time. Okay. So the first item we are going to look at, the first item we are going to list in the statement of financial position, that is the balance sheet, is the assets. Okay. And the asset we have, it's classified into two mostly. That is the current asset and the non-current asset. For current asset, these are assets that are expected to be utilized within a period of 12 months. Okay. Dr. Enos, just click. There's a link on my TikTok stories. Join from there. For the people on TikTok, there's a link on my TikTok stories. Join the live from there. Okay. So let's start with the assets. I'm saying they are classified into two, mostly the current asset and the non-current asset. Current assets are what we are expecting to utilize within a period of 12 months. That is 1 year. Okay. For example, cash. When you get cash today as a business, you can use it tomorrow to buy inventory. You can use it tomorrow to buy equipment. You can use it to pay your employees. So this is something that you use within a period of 12 months. But when you buy, for example, land, this base, let's say a manufacturing company has bought land. This land, they intend to use it in a period of more than 1 year. Maybe they want to manufacture, so they're buying this land and they're going to use it for whichever amount of years they want to use. Let's say, for example, you buy a laptop for the business to use. Okay, administration purposes, not a business that is dealing with buying and selling laptops. No, that becomes inventory now. But if you buy the laptop and this is to use in your business, you're not buying it so that you use it for 1 month. No, you want to use this laptop for a period of more than 1 year. So those are non-current assets, the asset that you can utilize them in a period of more than 12 months. Okay. So now let us start with listing the current asset. So we usually list the current assets first. The current assets. So from these balances that we've been given, we should be able to identify what are current assets and what are non-current assets. Okay. So from my explanation, land and buildings. Land and buildings is a non-current asset. This is a non-current asset. Why? Because you're building this building, or you have this land, at least so that you can utilize it for a period of more than 12 months, right? Also the same to motor vehicle. Okay. And then you also remember there is accumulated depreciation. Remember, we usually represent the carrying amount, or rather the net book value. So when you're being given here motor vehicle and you're given here the accumulated depreciation, that means to get the net book value, we have to take the cost, we less the accumulated depreciation as at that particular point. Okay, because we are expected to represent the net book value, or rather the carrying amount as at that particular point in time. Okay, so here you're going to take the motor vehicle, we less the accumulated depreciation, and also for office equipment we are going to less the depreciation. Remember this as well, the office equipment is a non-current asset. Okay, so we want to identify current assets first, and you can see here we have inventory. Remember, inventory is the stock. You buy that stock, you buy the goods to sell. Okay, so this is something you intend to buy and then you sell. Okay, so this is things that you're going to utilize within a period of 12 months. Because let's say, for example, you are dealing with buying cups and selling them. So you buy some stock this month, you sell it the next month. Okay, so this is one of the examples of current asset. Okay, so that is inventory. We come right here, inventory as our first current asset. As our first current asset, it has an amount of 1 million. Okay, 1 million. 1 million. Okay, so this is in shillings. So let's have this, we change it to shillings. Okay, so then another current asset, we have been given trade receivable. What are trade receivables? Trade receivables are what we have sold, but we are yet to receive the amount, the money from the client. Okay, so we have sold, but we are yet to receive that money from the client. So we record this as our current. It's usually a current asset because maybe you're sold on credit today and this client is going to pay you tomorrow. So okay, so as at this particular point in time now, as at 31st December 2025, for example, we have trade receivables we are expecting from the client of an amount 780,000. And depending on how big the company is, remember in our period end adjustment, you should have the allowance for, actually it is here, the allowance for expected credit losses. This is basically the same as what is commonly known as the allowance for doubtful debt or debt or bad debt or provision for doubtful debt. It is the same. Okay, so IFRS these days refers to it as expected credit losses, which is the same. When you sell on credit, someone could pay you or not. Okay, someone could pay you or not. So you have to create an allowance for this, for what you might not collect. Okay, that is what we are calling an allowance for credit losses. So for us to be able to get the net book, or rather, we should not write an overstated trade receivable. We should take into account this allowance that we have created for expected losses. So we need to take that 780,000, that is the trade receivables, we less the 30,000. So we are going to have this is 750,000 of trade receivables. Okay, so we come here and say trade receivables. Okay, so trade receivables, an amount of 750,000. So remember, always you have to take into account, okay, you have to less that allowance for expected credit losses, because when if you as at this point, the people who have not paid you, they have a value of 780,000. And in your previous years, there are this amount of people that have defaulting. You have to create that allowance, okay, so that you don't have an overstated asset, and also so that you don't have an overstated profit in your statement of profit or loss. Okay, so then the other common current asset is the cash at bank. The cash at bank, the cash that is sitting in your bank. Remember, this is money that you could take and use it to buy inventory tomorrow or pay your workers. Okay, so cash at bank, we have 420,000. Okay, 420,000. We have 420,000. Then you also have prepaid insurance. What is it we call prepaid insurance? So for example, when you go let's say in December, you pay for insurance for the next period. Okay, as at December 2025, you're paying for insurance for the period 2026. So you see, you've paid with cash, but this, remember in accrual accounting, we recognize expense when they have been incurred. As at that particular point, we have not incurred that insurance, because the next period we are looking at January 2026 to December 2026 is when we've paid for this insurance. So we are yet to utilize what we paid for. So as at this particular point, that is 31st December 2025, this is an asset to the business. We are yet to expense it. So as we expense it every month, we reduce that asset. Okay, so we amortize basically. Let's say when we get to January, if we had paid, let's say 120,000 for the whole year, then each year gets 10,000, 10,000. So you'll continue, you will expense it as you reduce your what you had recorded as an asset. Okay, so as at this particular point, as at the end of 31st December 2025, our prepaid insurance, our prepaid insurance is our prepaid insurance is 90,000. Okay, our prepaid insurance is 90,000. Then we have ordinary share. What is ordinary share? Ordinary share is equity and retained earnings is equity. Remember, these ones are classified under equity. Always know when you're given the account balances or the trial balance, it is good for you to know what are the assets, what are the liabilities, and what is equity. Ordinary share capital, this is the share contribution. This is what the owner has contributed into the business. And retained earnings is usually after now we have collected revenue and we've less our expenses. That is what we refer to as the retained earnings. If there are any drawings, that is if the people are the shareholders are taking from the business, that is the dividends, what remains at the end of the period is what we call the retained earnings. Okay, so the business usually keep these retained earnings so that they can use them to expand the business. Okay, so they could maybe increase the stock in the next period, maybe hire more people. Okay, so that is retained earnings, and it's usually a component of equity. Then we have long-term loan. Okay, long-term loan, and we are told it's 3 years. A long-term loan is a non-current liability. Why? Because it is going to take us more than 1 year to pay that loan. Okay, then we have trade payables. Trade payables is when you go to your supplier, you take in the goods you are yet to pay. So you owe your supplier, you have to record that trade payable, and definitely you're not taking this trade payable. We are not taking this trade payable so that you can stay for more than 1 year without paying. No, your supplier will come for you. Your supplier is going to maybe give you a month, depending on the arrangement of the stock. Okay, then we have accrued expenses. We have accrued expenses as well. These are expenses that you have incurred and you've not yet paid for. And we have income tax payable. You're supposed to have paid this tax, but you're yet to pay them. So these basically are liabilities. Okay, so Mohammed, I can see your question on how we calculate allowances for doubtful debt. I've actually done quite a number of classes on doubtful debt. I'm going to do an example, okay, for how we do it, but you can check after this class. There is some, I think I've done like 2 or 3 on allowance for doubtful debt, how we go about it, when it is a direct write-off, and when we have to look at the receivables in the previous period, we compare with the bad debts, then we calculate it as a percentage. Okay, so after the class, I'm going to share with you the link to that, to those classes. Okay, still here on YouTube, you can just check them. Okay, so now now we go back to what is now. We don't have any other current asset. We have included all the current assets. Now, what is the total current asset? What is the total current asset? That is just a summation of this. If you have any question, just chat it. Feel free to chat it down. I'm going to answer as we continue. So 1 million, we add 750, we had 420, and then 90. We are going to get a total of 2,310,000. Okay, that is the current asset. Now let us look at non-current asset. As mentioned, the non-current assets are those assets that it's going to take us more than a period of 12 months to actually utilize them. We are going to take more than 12 months to utilize them. That is like land. It's something you're going to use over a very long period of time. Okay, so we saw here we have land and buildings. So we come in right here, land and buildings. So land and buildings, we have an amount of 4,800,000. Yeah, is that right? Yes. Then we have motor vehicle cost, which has an accumulated depreciation. Remember, we usually record the net book value. We usually record the net book value. So this is the cost of buying this motor vehicle, and this is the accumulated depreciation over the period since when we bought. So to be able to get the net book value, we basically take the 1 million, okay? We 1 million, we less 450. We less 450, okay? So this is going to give us, so if we less 450, what amount is going to be left? 1,050,000, okay? 1,050,000. So that is what we're going to carry here as our motor vehicle cost, okay? So remember, motor vehicle is something that you're buying to use for a period of more than 12 months. So this is an amount of 1,050,000, okay? Then we come to the office equipment, the same. We have to less to get the net book value. So we take 900. That is the buying price, okay? 900,000. We less 180,000, okay? We are going to get an amount of, we're going to get 720,000, okay? 720,000. So for office equipment, remember, office equipment is like your furniture, your desk, your actually, office equipment, furniture and fittings are different. Office equipment is like your laptop, your printer, okay? All those things. So 720,000. 720,000. Again, for the people who are joining on TikTok, I'm streaming on YouTube. There's a link on the TikTok stories. So then we go to any other non-current asset. So we have done this, okay? So what is our total non-current asset? What is our total non-current asset? This is just a summation of the current non-current assets, which we're going to have a total of 6,570,000, okay? So the total assets in this business as at 31st December 2025 will be a summation of these and these, okay? So this is going to give us, this is 8. This is going to give us 8,880,000, okay? I hope as at that point, let me know if you are okay. As at that point, hi SBS 72. Hello. We get the live. I usually do the live sessions on Tuesdays, Thursday, and Saturday, 7 p.m. East African time, okay? Okay, let me know if you got that answer. On YouTube, you're going to find me on YouTube stream. That is for Tuesdays and Thursday at 7 p.m. East African time. Let me know which country you're joining from. Then Mohammed, what about depreciation expense? Depreciation expense will go to the statement of profit or loss. We actually had that class on Tuesday. Okay, we had that class on Tuesday. That is the statement of profit or loss. So when you come to the statement of financial position, we look at the accumulated depreciation since we bought this asset, okay? Then on TikTok, I'm streaming from YouTube. There's a link on my TikTok story to take you to YouTube, okay? My account is Accounting and Finance Playbook, but there's a link to help you. There's a link on the TikTok stories, okay? Let me know once you're able to join. So for depreciation expense, we claim that the expense for that, only what we've depreciated during that year or during that period is what we take to the statement of profit or loss. But for the accumulated depreciation, that is from the beginning when we bought this asset, we usually reduce it from the cost of this asset to get the net book value of that asset as at that particular point in time, okay? Mohammed, let me know if I've answered your question. I think I'm going to reschedule another date for the statement of profit or loss. You will understand. And also I've done some videos on depreciation. Mohammed, check them out. Then for Kabdi, man, I didn't come on time. We are usually here 7 p.m. exactly at 7 p.m. East African time. For the people on YouTube, I am streaming on TikTok. I'm streaming on YouTube. Check the link on the TikTok stories, okay? So now let us continue. Any questions so far with the assets? Any questions so far with the assets? If none, I want us to get to the next one, the next section, which is equity. Comment there if you are comfortable with the assets section. We go to the next part. So under equity, let me know. Under equity, we have ordinary share capital, and we have retained earnings, okay? So here, remember, ordinary share capital is what the owner has put in place, okay? Is what the owner has put into the business. Is the amount of, this is now the owners, let's say the shareholders, they have the nominal value of the share of these shares. For example, let's say you have the business, the company has 100 shares of nominal value 100, okay? That is what we are calling the ordinary share capital. And as at that particular point, the ordinary share capital is 5 in this business is 5 million, okay? Is 5 million. Mary Akinya can see your question. I'm going to address it after this, but I teach many units. I'm going to list them after this. Then we have retained earnings as well. Remember, it is also a component of equity. And retained earnings, remember, for you to be able to understand these, I've done also videos on assets, liabilities, and equity separately here on YouTube. You can check them out after this class, okay? So we have retained earnings, a balance of 1,200,000, okay? Okay, and when you join, kindly subscribe to the account so that when we stream, you do not miss, okay? Please remember to subscribe on the YouTube account for the videos that there are many videos here that I've pre-recorded that you can use to guide you, okay? So what is going to be our total equity? And if you have a question, just feel free to ask. So the total equity is going to be basically 6,200,000, okay? 6,200,000. Then now, which is the third section, remember I said the statement of financial position lists the assets, the liabilities, and equity. So we've listed the asset, and the asset, we've grouped them into current and non-current asset. We have listed the components of equity. Equity, we just have the components, that is the capital contribution, or rather share capital. We have the retained earnings, okay? That is what is basically you find in equity. And then we have now liabilities. We have liabilities, okay? We have liabilities. That is the one that I want us to look at. So liabilities. Remember as well, we have current and non-current liabilities. For current liabilities, what are current liabilities? These are liabilities that you are expected to settle them within a period of 12 months. That is 1 year. You see, if you go buy from your supplier on credit, you're not going to keep them 1 year waiting to be paid. No, they expect you to pay them in one month or week, or depending, but not a period of more than 1 year, okay? These are what, or maybe your employees have worked this month and you're yet to pay. You're not going to keep your employees unpaid for more than 1 year, okay? So this is what we call current liabilities, okay? So for let's look at these balances we've been given. We see what are the current liabilities. We already classified here the liabilities that are there. We have long-term bank loan. Long-term bank loan that is more than a period of 1 year. That is basically a non-current liability. A non-current liability is a liability that is going to take us more than 1 year to settle, okay? And then there is a trade risk payables. Trade payables, Where do we classify them? Remember, trade payables are these, the goods that you bought, or what when you buy from your supplier on credit and you're yet to pay. That is what we are calling trade payables, and that is a current liability. Okay, so we come here and write trade payables, right? Trade payables, an amount of 720,000. Okay, 720,000. Then, is there any other current liability? Yes, accrued expenses. Accrued expenses, for example, is let's say your employees have worked this month and you're yet to pay, but they have already worked, so the expense has been incurred. Another example is you've used the electricity, but you're yet to pay. You can accrue that expense. You have anything that you have already incurred that you have not paid for as at that particular period end. As at that particular point, you need to make sure you have that accrued expense. Okay, you have accrued expense. So in salaries, you could have salaries payable. You could have it as accrued, as long as we can see there's something that has been incurred. It's just that it has not yet been paid. Okay, so here our accrued expense is 160,000. Okay, so let's check, is there any other current liability? Is there any other current liability? We also have income tax. Remember, income tax, your tax regulator is not going to wait for a period of more than 1 year waiting for you to pay them. They expect you to pay when it is due and not within 12 months. Okay, so here we have also income tax payable, an amount of 100,000. Okay, so our total current liabilities will be a summation of these three, which is going to be 980,000. Okay, 980,000. So as at that point, we've cleared the current liabilities. Now we look at the non-current liabilities, which we saw. We have a bank loan, because it's something that is going to take us more than 12 months to settle. 12 months to settle. Remember, the ones on TikTok, I'm streaming on YouTube for you to flow with the class. Just there's a link on my TikTok stories. Okay, so here we have a long-term bank loan. Okay, we have a long-term bank loan, an amount of 1,700,000. Okay, 1,700,000. 1,700,000. So our total non-current liabilities will be 1,700,000. So because that is just one item, let us calculate our total liabilities. Our total liabilities, which will be a summation of our current liabilities, which is 980,000. 980,000. We sum 1,700,000, which is going to give us 2,680,000. Okay, now so at that particular point, the liabilities we have in the business. Remember, liabilities are things that you owe your other third parties, your supplier, your employees, all those people, the business that has not paid. That is basically what we call the total, the liabilities. Okay, so as at this particular point, what is our total? Remember, the assets are equal to the liabilities plus equity as at that particular point. So let us get our total of equity and liabilities. Okay, a total of equity and liabilities. Total of equity and liabilities. Remember, they should balance with the assets. Okay, so here this is going to be, the total liabilities is 2.6. We come and add equity, which is 6.2 million. 6.2 million, which is going to give us 8,880,000. Okay, when we add this plus we add this to 6.2, it is going to give us 8.8. Is this not the same as the assets? this is the same. Always the assets in a business will be equal to the to equity and liabilities as at that particular point in time. Okay, every time a financial transaction is passed, the assets will be equal to the liabilities plus equity. Okay, let me know any questions so far. Any questions so far for the ones here? For the ones joining on TikTok, I'm streaming on YouTube. There's a link on my TikTok stories. There's a link on my TikTok stories. Kabdi, let me know any question. SB, Mohammed, any question? Yanda, let me know if there's any questions so far. If you've got to understand this statement, anything that you need me to clarify before we do the summary. Let me know. For the people on TikTok, I am streaming on YouTube. I am streaming on YouTube. Okay, nice. Nice to hear. Understood. That's nice. That is nice. Yeah, actually that I was doing a practical question, Mohammed. Yes, I will record. I will post the recordings of the class. No worry. You're going to find it here on YouTube. And I also have a lot of videos on the statement of financial position. Then many examples as well as Mohammed. Okay. Maybe if you have a specific question. But here we've created the statement. We've created here, as you can see, we've created the statement of financial position from scratch. Okay, remember we usually have to have the name. You indicate the statement that you're preparing as at what particular point in time. Remember, for the statement of financial position is usually as at a particular point in time. Okay, so it is not, like say for example, for the statement of profit or loss, we usually look at a period. We are looking at the revenues during a certain period and the expenses during a certain period. And then we are able to get the profit or loss that business has made. But when we are looking at the financial position, as this name indicate position, we are saying, what do you have as at this particular point? Is it that laptop? What's the value of that laptop? What liability do you have as at that particular point? Is this supplier? You remember during the whole year, you might have owed this supplier this amount of money, then you paid, then you got more, then you're not looking at that flow. We are looking at that particular point, that is as at that's December 2025. What is the balance? What do we owe? Who do we owe as this particular point? Okay. And also for equity, what is our equity as at this particular point? Okay. So we've done an example. We've created this statement of financial position. I said the first section, you do your assets. Okay. You list them into current asset and non-current asset. Okay. So here we have had the current asset, and then we've listed the non-current assets. And then we have the total assets. Okay. Then we have equity. Then we also have liabilities, which is divided into two as well. That is the current and non-current liabilities. Okay. And then we confirm that our total equity and liabilities are equal to assets. For the people who are on TikTok, I'm streaming on YouTube. For you to be able to find me easily, just go to the link on my TikTok stories or my bio and join from there. Thank you so much, Lauren. I'm happy to hear that. Maria Kini, this video will be dropped, or you're going to find it for this video, you're going to find it on the videos here on YouTube. Okay. And there are many other videos I would recommend you to watch. And then Mohammed as well. You're going to find some videos here on YouTube as well on depreciation. And I also recommend you watch a video on the statement of profit or loss. You see what do we do, what do we take to the statement of profit or loss, and what comes to the statement of financial position. So now I'm open for questions. Feel free to ask any question. Well, nice to hear, Yonda. Nice to hear. Nice to hear. Share it with your friends. Let them know we are usually live on YouTube. We usually stream on YouTube every Tuesday, Thursday, and Saturday. I know you are from South Africa, so it is at 6 p.m. South African time, okay? That's 6 p.m. Okay, I see a question on TikTok. Is profit always cash? No. You cannot, if you go, for example, when you see a company publish that they have made this amount of profit, you not every revenue that you will have collected. That is why we have account receivable. We've sold, but we are yet to receive that amount of money. That is cash. So when you are dealing with cash accounting, the profit will be actually the cash you have. But when under accrual accounting, that is different, okay? And accrual accounting, that is different. Meriakini, financial accounting, financial statement analysis, management accounting, financial management, okay? Let me know if I've answered your question. Anything on finance, feel free to hit me up, and also auditing, tax as well, okay? Auditing, tax as well. Auditing. Soon I will have different live days, 3 more days for management accounting. Which specific units are you looking at, Maria Kenye? Let me know. Any question from YouTube side for the people who are here? Thank you, Abdallah. Abdallah. It is well noted. For you to not miss the sessions, go to YouTube and subscribe. Go to YouTube and subscribe. Nice to hear, Mary. Nice to hear I've answered your question. For the people on TikTok, remember, I'm streaming from YouTube. I am streaming from YouTube. Yes, if you could be able to collect all receivables as at that particular point, then it should make sense. Huh? But the problem is, you don't forget to also have expenses in card. We could have expenses in card that we've not paid for. My YouTube username is Accounting and Finance Playbook, Yaibala. You're going to find a link on TikTok. There's a link on TikTok stories right now. Just click on it. You'll be able to join. Actually, you'll be able to join even the stream. Okay. Just check it. Go subscribe. For you not to miss these sections, kindly subscribe. Every time I start streaming, you'll be notified. So I see there's someone asking here under accrual accounting for the people on YouTube. If we collect all aged receivables, how about that? Are we able to say cash is equals to profit? Not the case. Because you could have expenses that you've also not paid. Basically, under accrual accounting, you can't relate that cash to profits, okay? Dologelo, hi. I don't know how to pronounce that. Welcome here. Can you please explain again about retained earnings? Good question. Let me show you that. So retained earnings. So I want to show you, actually this is under equity, okay? This is under equity, is where we usually have share capital. We have share capital. And we have retained earnings, okay? And from these retained earnings, before we call them retained earnings, they're actually profit, but you take dividends and you pay, okay? So what we are saying is, let me explain from scratch, okay? So during the period you've earned this revenue, that means You went and sold the items, goods or services, and you are paid. Let's say you had during the whole you've paid, you sold 100 cups at 100 each. So you've earned a revenue of 100,000. But that is basic. I'm just doing a basic model. That is revenue. That is your sales revenue. Okay. Then you incurred this amount of expenses, including you sold with the buying price of these. Let's say you incurred a cost of 50,000 to buy them. That is an expense. Okay, that is a net expense you incurred. So when you take this revenue, you less these expenses and the many others that a business will have in the process, you're going to have this 50,000 after paying everything, which is could basically, we call this profits after deducting all our expenses, right? This is usually, you're going to find it in the statement of profit or loss, okay? Then after that, now where do this money go? Where does it go? It could be left in the business, and once it is left in the business, this is what we are calling retained earnings. Okay, before we could first, if for example it is a publicly listed company that is paying dividends, they come and they see this the shareholders, these are the amount of shareholders they have this is how they have performed. They say they can pay these dividends out. Remember, dividends is what is paid out to the owner. Okay, so once we take this profit, we less dividends, then we are able to see at the end of that period, this is what we have called retained earnings. These retained earnings, when you go to the next period, we don't call it profit. No, we cease to call it profit as at that particular point. We call them retained earnings, and the business can use these retained earnings to do what? To expand the business. Now you want to import more cups, you want to sell a million cups. So are you going to get money to buy it? From retained earnings. Okay, let me know if I've answered your question. Also, let me know which country you're logging from. Let me know the country you're joining from. For the ones on TikTok, remember I am streaming on YouTube for you to follow the class. You go subscribe on the YouTube. There's a link on my TikTok. The Logelo. Hi, let me know if I've answered your question. Mary Akinya, I've noted. Financial accounting and law, that's nice. Feel free to share this with your fellow students, okay? They can join. The stream is usually free. Dimbeza, South Africa, nice. Nice to hear the Logelo. Nice to hear. You're from South Africa, nice. Kindly always share this stream to your friends, or share this account. You usually find me here on Tuesdays, Thursdays, and Saturdays, okay? On Tuesday, for South African time, that's 6 p.m. That is 6 p.m. That is 6 p.m. Okay, Mohammed, what's your question? Mohammed S? Hi, what's your question? What is the question? Let me know. Let me know what is the question. What is the question? You can share it. Feel free to share it. Feel free to share the question. For the people on TikTok, I'm streaming on YouTube. There's a link on my TikTok stories. My account is Accounting and Finance Playbook. The account is Accounting and Finance Playbook. Go subscribe. You won't miss the next stream. Today we were looking at the statement of profit, statement of financial position. On Tuesday we looked at the statement of profit or loss. On Saturday we are going to be looking at the statement of cash flows. For the people who are on TikTok, we are streaming on YouTube. Okay, we are streaming on YouTube. Usually stream on Tuesdays, Thursdays, and Saturday. Mohammed, feel free to share the question. Feel free to share the question. Feel free to share the question. Feel free to share the questions. For the people on TikTok, let me know if you have any question. Hi, Mr. Dan. Hello, 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 hello. So the people who are joining, follow, check out Accounting and Finance Playbook YouTube. You're going to find more and more videos there. For the people who've joined today's stream, thank you for joining. In case you have any question, usually feel free to email me. I'm going to respond to you promptly. Okay. Any question, and also make sure you come for the streams, ask your questions. Let us discuss this together. Okay. And it was much a pleasure to have you through this stream. Okay. I'll say good. Have a good evening. Have a good evening for the rest of the day. Okay. Bye. Bye bye. Mohammed, Dologe Miri Akinyi, Laure, Yonda. Always share this live with your friends. Always share with your friends and always share with your friends. So remember, I stream here. I stream here every Tuesday. Welcome. Thank you so much, Mary Akinye. Thank you so much. Share this live video. Share the account with your friends as well. Follow me on the other socials. I'm on TikTok, Accounting and Finance Playbook. I'm on Facebook, Accounting and Finance Playbook. Okay. Follow me there for any updates that I have. You will see them on those socials. Keep yeah. So bye bye. Well, thank you, Jacqueline. Thank you, Jacqueline. Yeah, share this. Always share the live. Follow me on the other socials. When I am updating anything, you will see it promptly from the other social media. That is TikTok, Accounting and Finance Playbook, and Facebook, Accounting and Finance Playbook. And have a good day. Have a good day.